There's one stock that is about to hit all-time highs. The ticker is AAPL. The stock is Apple. You know Apple. And it's notable because Apple was selling off earlier in the year. It wasn't looking as strong as companies like Google, even Meta, not even as strong as Amazon, certainly not as strong as Nvidia. And now it's looking to break into all-time highs. There's also the question of the Warren Buffett position, sell, and are they going to be a real machine learning AI leader, considering, Siri has been the subject of jokes, and now it looks like Meta might take the glasses game, which would make us not as dependent on our phones. So could be good for humanity, could be interesting for your portfolio as it breaks into all-time highs. These are the price levels and a little bit about the company itself as far as investor sentiment, which is pretty important for a company like Apple that's a consumer company. If you like this video, hit that like button. Let's get going. This is not financial advice.
This is Sam Putnam.
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 All right, so here is a little bit about what's happening with Apple recently. It's for the final week of the month, their October event. And the reason that's significant is earnings is also that final, earnings is actually the second to last day of the month, October 30th, which is Thursday. I'm not like an Apple fanboy. I'm probably not going to be like live streaming earnings or even listening to the earnings call. I'm here because it just so happens I look for the best stocks in the market, or the stocks that are at the best place to buy them, that are also pretty good stocks. And Apple satisfies that latter criteria. It is one of the best stocks in the market, but for pretty much most of this year, it was not certainly looking like one of the best stocks. It went sideways from the tariff bottom all the way to early August when it had that earnings turnaround, when the market absolutely went up. So it was a lot of relative weakness. Nvidia, of course, went up during that period. Pretty much all the big companies, the MANG companies, the MAG 7. I guess that's what the S stands for, 7. I was thinking, okay, Meta, Amazon, Google, right? Amazon has been lackluster after this earnings reaction. Google has been doing well, to say the least, almost 100% up from the tariff bottoms. Apple, it is 50% up, but the important part and why it is interesting is this all-time high level of $260. So there was a similar time, when it broke this all-time high, and you could say, well, maybe it'll do the same thing here. Maybe it'll break out and go 10% up or something, which would be like $20 up at the current price, and then digest back and retest, and then eventually go. Like, it could take, a full year once it sort of breaks out to then ultimately move up another leg. So this is a long-term hold idea with a low risk. Like, if it goes down a few percent, I still say you sell up. And also keep in mind, this was 2022 when the whole market went down. So it was understandable Apple went down and then rebounded. But it is a useful analog because when you look at the SPY, the market, it kind of dipped back, but it did start ripping in November of 2023, and it's pretty much from July to November it went sideways. If we look at Apple during that time, Apple pretty much followed the market. So I don't know that time period is the most representative of a breakout to all-time highs, but it certainly follows a similar type of concern, which occurred with the tariffs and which occurred with 2022 after the euphoric 2020 and 2021. So trying to find a useful technical period to compare to today, but sometimes all you can do is say, look, if it breaks over that level and then retests and holds, that's pretty good. You don't want to hold a big position into earnings, but with how compressed tight these days are, it only moves 1% a day. This is not going to, drop. I mean, sometimes it does go up 5% a day, but it's unlikely for tomorrow it to drop 5%. It could happen. It could drop 10%. Some news could come out and you could have a, Apple oven situation where the data collection practices are under scrutiny and it drops whatever percent that is. What is that? 700 to 550. That's got to be over 15% ish, something like that. So, point is, most likely you can risk a few percent, which would be, $10 or something, and make 20, $30. And that's just to get over all-time highs. If it really goes, this could go way higher. But again, you don't want to be holding into earnings. So that's kind of the chart. I think the chart's pretty important for this company because everyone and their mother knows, about Apple. So then the question is, what do you know that they don't? It's like, well, you can just take a deep look at the price agreement, which there appears to be some price agreement in the past few weeks here. And you can sort of use that as your edge. If you don't have that as your edge, maybe you're looking at the dates of their event, which is important. New products, not really new products, just new versions of the products we all know and mostly like. They are still rolling out this expensive luxury item that I guess is getting better every day. I mean, this is sort of their go at Meta's Ray-Ban glasses and all that, but they're very different form factors, right? And then, yeah, they got a new iPhone, and I'm not all about keeping up on the new iPhone. I just sort of get it when my cycle's up or whatever. Maybe I'm old-fashioned and I'm not upgrading all the time, but pretty much if the camera is great, people love it. And I guess they got a new camera here, so that could be good. I don't know. I think there are some worries about stuff like this, which is Warren Buffett selling. He sold 20 million shares in the second quarter of Q2 of 2025. Apple's part of the QQQ, which has been basically following the NASDAQ. It's been doing awesome. But Apple's not been helping the QQQ, that's for sure, with this movement. This was Q2 earnings, so pretty awesome earnings reaction given that Buffett sold. And 20 million shares, he's disposed 70% of Berkshire stakes since mid-2023. 20 million shares times $200, 20 billion, I think. I don't do public math, someone can check that in the comments. 20 billion is a lot, even for Apple. It's not a ton for Berkshire, I guess, but him selling and the stock still moving up during that period is a pretty awesome sign, I think. Even though he sold a huge stake. He was famously late to the whole tech companies runs, and looks like he's maybe early on getting out. We'll see what happens. But yeah, Domino's has been on an insane tear. I actually did a discounted cash flow evaluation of Domino's in my course 8 years ago. Okay, so here's the deal. We're not really here to look at what Buffett's up to, okay? But yeah, he's into treasuries. He's trying to buy when there's blood in the streets, whatever. He bought UNH, United Healthcare, down here, right here. This led to this little bump, and then it's been going up. So he is definitely, and that was right after Q2 earnings for UNH. So it would make sense to sell Apple to buy that if you are him. It's not clear if he sold it because he didn't like Apple or because he needed, or I guess he didn't need to free up the cash. That doesn't make any sense for Warren Buffett, but I guess we'll just look at it and say, look, he sold Apple and Apple still went up. So that must be that Apple is really strong. There is the concern, I guess they have, 50 billion in cash. Why aren't they offering, $1 billion pay packages like Zuck is for AI people? But again, sometimes some of Zuck's AI people are leaving who make like $1 million because someone else just got 100 million. And then there's like, strife within the team. And then there's also the like question of, okay, well, how many new iPhones can you come out with? And then the counter argument is, well, people like iPhones and they they have the best product, so why would you need to come out with a better product? But yeah, Buffett sold, and Apple, of course, is still making acquisitions like any huge company. Mobile video game acquisition studio. I don't know if there's anything super crazy in the AI sort of sector, like they can't buy Google's DeepMind or anything super game changing like that. But this is what Tim Cook said. He's going to significantly grow the company's investments in AI. So he's definitely aware of the perception that Apple's losing in AI. And so now the question just becomes, what actual headline grabber is going to come out? So yeah, Google, we were worried about Google because of Gemini, which only came out because of ChatGPT. Gemini is the little LLM response that you get when you type into Google and you get responses that aren't links. You get a paragraph of text, which is they were forced to do that because ChatGPT was so popular all of a sudden. And Apple hasn't really been forced to do that. Google was paying Apple to be their default browser, and Apple still has a 30% tax. Well, it's not really a tax. It's just you have to pay them to put your app, get money through your app on mobile, right? If you go to a web app, like for Spotify, you can pay for Spotify over the web app. You don't have to pay that 30%. That's been a subject of, slight controversy. Why should you have to have this monopoly, gate on your pricing? 30% is a lot. And then, Siri has been not as useful as maybe it was intended to be. And, yes, their AI models out from older models from OpenAI, but unless they have a ChatGPT type moment, and unless they put a ton of money out there, it doesn't seem like they are necessarily sort of keeping up with the Joneses, and their Joneses are pretty impressive. So maybe they'll participate in this OpenAI, Oracle, NVIDIA invest in OpenAI, so OpenAI can invest in GPUs from AMD or Intel and Oracle. Oracle will lease them to OpenAI. OpenAI can pay for them because they have that money from NVIDIA, and then they can wean themselves off of Microsoft, who they have to pay 49% of their revenue to. Maybe Apple will throw some money at OpenAI to get them off of Microsoft. We'll see what happens. Could result in a pop in Apple share price, but I'm not relying on that pop, just like I'm not relying or expecting. I wasn't expecting this jump on AMD. I did mention AMD in here, but I also mentioned a lot of tickers. And maybe you got chopped out on AMD, which is actually prudent to get chopped out if a stock goes down like a few percent here. More than a few percent, and it went a lot more than a few percent. So maybe you got back in and took advantage of that lucky moment, but maybe you didn't. Maybe Apple will have a lucky headline grabber like that. Maybe it won't. Point is, there's all-time highs. There's a risk level that's important. Low risk, high reward to buy it. And if you like these videos, hit that like button. If you want to talk in a place that is in the YouTube comments, which can be filled with all type of comments. I like the constructive criticism. Keep it coming. Head over to stockscommunity.com. Try it out for $25 for 7 days. And if you haven't hit that subscribe button, hit that subscribe button. I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.